Hey, what's up guys? Welcome back to another video. Today I'm going to be going over GPP and this trade that I took earlier this week. And I'm going to be talking about market structure, institutional order flow, a bunch of different things. So stay tuned for later in the video. But before we do get into the video, I just want to quickly say I'm not your financial advisor. Anything I do say, it's off my own knowledge. You can do everything for free on YouTube. And just trade smartly. Sorry, that was my phone. Let me just quickly do that. So first thing first, getting into this video, I'm going to be talking about this trade that I took earlier on GJ, why I was looking at this level. This is the previous February 23rd, today's the 24th, you can see. But yeah, so I'm going to be talking about this trade. We'll actually go replay mode, and I'm going to be breaking down market structure and why we're focusing on this level right over here. So first thing first, checking the monthly time frame, right? A lot of people like to check the higher time frame, so do I. The higher time frame was obviously telling me the market was super bearish. Not even focusing on this current monthly candle right here. If we focus on these three candles, we can see little to no bearish pressure at all. It's pretty obvious the market just wants to continue going bullish. So if the monthly is bullish, right, and the weekly, let's check the weekly time frame out. Weekly, not a single week closed bearish at all. 1, 2, 3, 4, 5, 6, 7, 8 to like over 11 weeks straight bullishness. So in reality, it makes zero sense to look for like selling opportunities at all, unless you're intraday scalping in and out. Now daily time frame, if the weekly, monthly are pretty bullish, then most likely daily is gonna be bullish as well, and so the 4-hour. But going straight into the 1-hour time frame, this is where I'm going to be breaking down market structure and institutional order flow. So first thing first, people ask, what is institutional order flow? It's a pretty simple answer. Institutional order flow is just finding the general direction of where institutions are buying and where institutions are selling, and overall where the money is flowing in the market, where it's flowing and when it's flowing. So obviously we can tell that the movement is towards the upside, right? So this is pretty obvious. Everyone's going to be selling, but you see these small little bits of consolidation ranges where the market, consolidates, goes up, retraces, does all this bit. This is all just to confuse you, to make you think that sells are in the market. And then a lot of people start taking sells, but in reality, there's no selling market structure at all. There's no bearish market structure at all. If we know that the overall movement is towards the upside and the overall money is being pushed towards the upside, then why is it, why are we looking for sells instead of buys? It doesn't make sense, right? So I'm gonna be breaking down what happened over here to you guys right now. So we can see that starting off from this point right here, let me open my path tool. Right over here, we can see that right over here, the market just completely pushed up. From this push up, after this expansion, we had this little bit of retracement where the market was consolidating a little bit, retrace, and then it pushed up again. And now this is what I want you guys to focus on. After the market pushed up and it retraced and then it pushed up again, what ended up happening? We ended up retesting the previous level that expanded. So what I mean by that is, let me actually get my tool out. Right over here, we ended up testing the exact level, right, where the market first expanded. So after the market retraced, right, right over here and expanded, taking out these highs over here, the market came back to retest that expansion. Now a lot of people call this, if you go to the 15-minute time frame, you can see that there's an order block over here. So your entry could have been this order block. But we can generally see that the market is basically moved, on GJ at least, is basically moved by expansion, retracement of that expansion, and then the continuation. As you can see from here, we expanded, we retested that previous order block inside of the expansion, and then we came here once, twice, and then from there we moved pretty nicely over 79 pips. So you generally want to be getting inside when the market is expanding. Now how do you do this, right? Well, if you check the smaller time frame, like the 30 and the 15-minute time frame, and we go to replay mode right over here, well, you have to start realizing that when you see this little bit of consolidation, you have to start imagining all the people that are taking sells, right? A lot of people that are predicting the trend towards the downside now. Instead of, realizing that this is just a little bit of consolidation and manipulation, people start, predicting that the market is going to sell all the way back down, retest this order block over here, and then push up. Like, the problem with this is, why would you want to start predicting things that that haven't even been presented, right? So why are you predicting things that aren't presenting itself? As a trader, your main concern and job is to react off of what you see. So if I'm seeing this market movement is ranging right now, that doesn't mean that I have to trade this. That doesn't mean that there has to be a trade every single time I'm looking at a chart, right? Now you can go to the 15-minute time frame, 5-minute, and look at all this. Look at all this noise, right? People are gonna say, okay, look, there's an order block over here. Look for buys, or I'm sorry, look for sells. People say there's an order block right over here. Look for buys. But in reality, the market structure hasn't shown you anything, right? So the main point is that you shouldn't be trading when you don't see anything. It's okay to not trade, right? So not trading is actually a skill. A lot of people sometimes they tend to make themselves see setups when they don't actually have a setup, right? What you have to focus on is following your trading plan, following your set of rules. If you don't have a rule-based system that you follow every single day when you take a trade, then at the end of the day, there's no way you're going to become profitable, right? And now, analyzing market structure, let's just quickly see what happened in the past. Right now, what do we see? We see the market pushed up and it started consolidating, right? And now people are going to start, calling out sells. But let's see what happened before when the market did that. Right over here, same exact situation. Market pushed up. The market pushed up right over here. Consolidated. Everyone's selling. Guess what ended up happening? The market pushed up, right? So this is what I'm telling you. Why are you guys, what's the point of predicting a movement towards the downside if there has been yet to show any movements toward the downside? No structure has been formed. Overall order flow of the money is going up. Then don't take sells. It's that simple. So over here, let me actually, okay, we're gonna have to play this a bit now. Go towards the 1 hour. Yeah, right over here. Go to 1 hour time frame. Play this a bit, movement, and okay, right over here. So right over here, now you're gonna ask like, why was I focusing on this level right here? Like I said before, I want to get in on the expansion. Before this move happened, what you have to realize is that we had these set of equal highs right over here. We had this level of equal highs just right over here. Now I'm not going to get into liquidity this video. That's going to be for a second video, which a lot of people did request that, so I will be getting that into a second video. But we can see that we have a lot of equal highs over here, right? And if I'm not going to talk about liquidity, I'll make this more simple. If the trend is moving towards the upside, we make higher highs, higher lows, right? But in this case, what we see is that we have a bunch of equal highs, and a lot of people are predicting this as the trend changer, the movement towards the downside. So when we saw that the market ended up taking out those highs and it made a new high, this was my indication that the movement and the structure is still bullish and the market is most likely going to continue bullish. So like I said before, we're getting in on the expansion. So how do I know this is the expansion? Well, for one, if you're looking at these candles, the last three, you can see they're really big and momentum candles. Secondly, we can see that this huge momentum push towards the upside took out these equal highs over here. So basically it created a new high, creating new market structure. And if you go on this on the line chart, right, what you can see is higher highs, higher lows, higher highs, higher lows. You see that? So we have a low, high, low, higher high, higher low, higher high. It's pretty simple. It's all about market structure. So going back towards the candles, I saw that this is the expansion towards the upside because we took out the equal highs and a lot of momentum, and this this is the higher high. So secondly, I made a video on order blocks. Please watch that. That's it's really helpful in situations like these. But I noticed on the 1 hour time frame we have this order block right over here. Now the reason this is an order block is because I explained the last down candle before the huge push towards the upside that took out equal highs. So if you go towards the 15-minute time frame, right, you can later refine this even more to down here as your order block, or even here. I had it refined to only up to here, specifically because sometimes if you refine it too much, you might get a little too accurate. For example, if you refine it all the way to here, you might get a little bit too accurate, and the market might be missing your limit, by a couple pips and then go away without you. So that's why I had mine about refined up to here. So going towards the 15-minute time, up to here, up to here. So going towards the 15-minute time frame, we have a refined entry of the order block. We have our confirmation that this is the expansion towards the upside, breaking us out of this support resistant range, and also breaking structure. We broke a bunch of structure here, 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 and we also broke this previous high. So now that we broke that previous high and we have our order block, all that's left is to wait for the market to come inside of your zone. Now the way I trade these zones is I usually have my entry at this level right here at the open of my order block zone, and then my stop loss is always the close. Now I'm not gonna bullshit you guys, I definitely did not enter this trade. I'll show you why I didn't enter this, which was completely my mistake. But yeah, so we didn't enter this trade, but at least we had it called out, and the zone did play out perfectly. And TP, I think if I was holding that, I just would have targeted, you know, these highs right over here for 44 pips. If not, you know, maybe check the monthly time frame to get a long-term target of where I would target, which would probably be this monthly high right over here. So going towards the 30-minute time frame, right, when you see that this would have been a nice 39-1 if I was holding this. Realistically, I wouldn't unless I'm holding it long term, but for the sake of this video, let's just do this. So yeah, like I said, just waiting for the market to come tap into our zone, and when it does, you know, we'll be in. So right over here, this is the perfect example. Right over here, we get tapped into our zone. I went straight to the 5-minute time frame. On the 5-minute time frame, now this is where I messed up. Instead of entering right away, what I started doing is I started you know, looking for more confirmation. So I was focused on order blocks like over here. If you go towards the 3-minute time frame, I was focusing on this order block right over here. I was trying to get a more, you know, confirmation entry, because my idea was that, you know, the market came, tapped us in. All I want to see is a breaker structure above this high. So break above, come back in, and then move towards the upside. The reason that this is actually, you know, this isn't the type of mindset you want is specifically because you can't predict these type of movements, right? As a trader, you can't predict what's going to happen. Instead, what I should have done is I should have entered over here. If the market went below, I would have stopped my, you know, I would have got stopped out. And, you know, if the market continued going up and breaking these highs, I would have held this trade and going higher. So this is where I did mess up. So I'm not going to take any credit for this trade. I did not enter this, right? But let's see. Entry would have been really nice if we did get this sniper. Stop loss would have been here for about 15 pips, and then realistically, I guess take profit would be here for 50 pips. So a nice 3-1. Check like the 5-minute to get a better idea. And as you can see, market just, you know, there we go, take profit hit. But it actually moved over 200 pips after that, as you can see. But yeah, that's basically the overall market structure of why I entered there, right? I'm simply a trader who likes to get in on the expansion instead of the consolidation. So to give you guys a better idea what I mean by that is right over here. As you can see, the market, it was trending up, and then out of nowhere it started doing movements like this, you know, showing us stuff like this. Now after we took out this high, after we took out the equal highs over here, I noticed that this was the expansion to take us, you know, to go higher. So all I did is I waited for the retest of that order block inside of that expansion, and after that expansion, the market continued going higher. It's pretty simple. The reason I don't like to trade inside accumulation zones and distribution zone is specifically because, you know, there's so much like false signals, right? Where you might be looking at, okay, you see an order block here to buy, you get stopped out. You see a, you know, a sell side order block there, you know, you sell, you get stopped out. This is specifically why I don't trade accumulation or distribution. I like to get in on the expansion. Now, one more thing that I would like to cover, I know I said this before already, but like the markets are fractal, right? The markets are a fractal. Basically, whatever happened in the past is what's going to happen in the future. Everything's calculated. So, for example, right over here, this is right over here. We see that the market was consolidating, right? We see it's consolidating. Let's actually go to replay mode over here. So, the market's consolidating. It's going up, down, up, down. You're getting all these fake signals, right? And now you're going towards the 1-minute time frame, and you know, you're looking at all these order blocks over here, here, here. You're just confusing yourself with all this, like, you know, nonsense initially. What you should be doing is focusing on your higher time frame levels that, you know, you're interested in, or waiting for a level to present itself. Because right now, if I go to the, you know, if I go back where this order block wasn't created, right, and I'm on the 1-hour time frame, I know a lot of people, including myself, who are gonna start creating levels that don't even matter. Like, for example, this sell side order block right here, people are going to start looking at this order block to sell at, and what ends up happening is, you know, boom, you just get stopped out if you sold there. So wait for the market to present you opportunity to enter. Don't enter when you don't see anything, you know, because then you're just going to end up losing money, and at the end of the day, you won't become profitable, right? This is all about patience and skill. So I explained why I entered here. I explained the market structure, you know, institutional order flow, where the institutions buy. The institutions buy and sell. Now, I can't give you exactly where they're buying and selling, but I can give you a general idea. The institutions, I can tell you right now, they're not buying over here, here. No one buys in the middle of the market. So if you see an order block right over here, most likely you shouldn't be taking it. The institutions like to buy when price is really low and sell when price is really high. Now, this is where a lot of people start getting confused. Now, even smart money concept, people think that okay, the price is way too overextended, you know, price is going high, everyone's buying. It makes sense to start looking for sells instead of buys, right? Now, the general concept of this is correct. Yes, when everyone is buying, at one point, you know, institutions and banks are gonna have to start selling, you know, to stop a lot of people out. But this is where the consolidation comes in. When all these people, you know, that say, oh, the market is overextended, and they start seeing sells, what ends up happening to them? You know, they get presented with the sell side opportunity. You know, they go to profit for a little bit. You know, let's say 60, 70 pip profit, and then what ends up happening? The market reverses and it gets to up them out. So this is what I'm saying. When the market is creating consolidation zone like this, specifically on GJ, stop predicting a reversal. Instead, trade with what the market is telling you. The market told me that over here, it created an order block, it tested it once, twice, and then it moved up, right? So all I have to do now is wait for the second expansion. What do I look for in expansion? Like I said, as long as the expansion breaks previous equal highs or equal lows, depending on if we're in a downtrend, right? And you know, the movement towards the upside was actually really, you know, volatile. And by finding that, you go to your indicators, type in the volume indicator, and right over here, if you look at these bars, you can see that it, like out of nowhere, is really small, and then right over here, there's a really big spike in volume right over here. So you know, the next time the market does come back in towards this level, you're expecting the market to create the same move. Now, this is just a little, you know, a little trick that I like to use for volume. But yeah, that's basically it. Don't predict reversals. Trade with what the market is telling you. Stop, you know, looking for entries when there's not an entry valid. And please, please, please make sure you have a rules-based set of system. So you have to have a system with a set of rules that work. Back test it. You know, if it doesn't work for you, you know, if the one set of rules don't work, create new rules. It's all about change. But that's basically it. I hope you guys enjoyed this video. If you guys have any questions, please leave a comment below, and you know, I'll try to get back to you as soon as possible. I'm going to be leaving my Telegram in the description for anyone that needs to get in contact with me or has any questions. But thank you for watching, and leave a like and subscribe.